Well, let's talk about the individual stocks and begin with Royal Bank of Scotland, which is the UK's third largest banking group.
I'm actually not sure why I picked this one, because operationally it belongs 73% to the UK government, which was from the rescue in 2008, 2009, but it's an out-and-out UK bank. So it looked to me like maybe this is the sort of investment which could go up or go down depending on what happens.
But you've also got to take into consideration the external exposure. Maybe it's UK, and UK is not going to change the landscape, and so it's protected to some extent.
So we could have talked about Barclays and HSBC, of course, which are bigger, but those are more international banks. So what I wanted to look at was, will the financial sector suffer if, for example, everybody quits London and goes to set up shop in Frankfurt or Paris?
Fair point. So it owns subsidiary brands like NatWest, Ulster Bank and Coutts, and its market capitalization here is 28.5 billion pounds.
Right,
and
which
it's
is
got
about
no PE.
440 billion rand, so that makes it bigger than all of the South African banks. But remember, the government owns most of that.
No PE or dividend yield. Right.
It was somewhat of a casualty of the global financial crisis,
Somewhat of a casualty.
and has really struggled to sort of regain its feet. It is a substantial player in the UK, and so is an important part of the economy. And it's a broad-based bank like a Nedbank or an ABSA, Barclays Group Africa in South Africa. And really, so it is very exposed to the mechanics of the UK economy. They have actually been cutting their peripheral interests. They've had some exposure to the UK. They do lending into Western Europe as well for their corporate clients. They've been looking to retract from that. They've sold their operation in the US and really build the balance sheet locally, improve the quality of the loan book. So it's very much a work in progress. The share did drop, if you looked at it, 40% post the Brexit vote. It has recovered back to sort of those levels pre-Brexit vote. And
so a nice opportunity if you had bought it on the 40%.
Yes, but I think now, as we're saying, the reality is sort of becoming to bear, and it's drifting a little bit lower. I think it's going to struggle in the medium term.
Let's look at the share chart. It's a pity we can't show you a 10-year share chart, because the all-time high was £68, and it's now trading at £2.35. It did a partial sale through privatization to try and reduce the government's stake from 80 to 73, and that placement was done at £3.30. So even if you bought in the privatization, you've lost money. I don't know. I mean,
and
as
this has
Rowan
come
says,
all the way down from £60.
It's 68. That was the high, but that was in 2007. It was briefly one of the world's most successful banks, and it was really flying. But then it came a cropper with subprime lending and all sorts of disasters and dramas.
So you don't sound too enthusiastic on the story going forward for Royal Bank of Scotland.
It's a two sort of way play. It's a play on the recovery of the bank itself, and then obviously the exposure to the UK economy. And we don't sound too positive on both, so not positive on Royal Bank of Scotland.
Not hot.
No.
Paul, are you hot or not, sir?
No, I suppose in the long run, if the UK economy rebounds and the whole thing is put past them, and then there's a sense of nationalism and pride that arises from the sort of old blighty going boldly into the future, but not for a good 3 years, I don't think.
So not hot.